Ho, ho, ho. Hello and welcome. You are watching Agronomy and Economy. Today is December 22nd, 2015. I am Ryan Buetow.
And I'm Levi Helmuth.
I am an area extension agronomist with NDSU Extension.
I'm an instructor with the North Dakota Farm Business Management Program, BSc employee.
All right, well, let's go right into the market update.
All right, market update. Just forewarning, this is a little lengthy. We got a bunch of stuff going on. The Fed raised the interest rate. Federal Reserve had a meeting last Wednesday, and they did 0.25% increase is what happened. And that's actually, I've heard some economists say, Wall Street Journal articles that were calling that it should have been a 0.5% increase. They think it should have been more. There's also speculation that as we move into 2016, what we could see, we'll probably see at least one more 0.25% increase. I think by December of 16, we could be 0.75% higher than where we're at for the November of 15. U.S. dollar is still very strong. So I think that's still hurting some of our exports. Usually I'm pretty good about trying to have some spot prices, but I was gone last week a lot. I've had farm meetings, and then I gave a presentation over in Minnesota, so I don't have spot prices, but I did do a quick little write-up, looked at what we're trading at the board right now. March hard red spring wheat, between 5 and 5.15. Those are kind of the upper and lower bound. So just a quick reference, 2014, the region 4 out west here, 502 was our break even, so you figure 50 to 60 cent basis off the board, so we're well below that break even point still. Corn, 364 to 375, is kind of the trading levels there, and that's down from 380 where we were earlier in the month on the March contracts. Soybeans are trading in 880 to 890, so we're still low that way. Real quick with the dollar, I guess I've talked a lot about that, and I've mentioned that in earlier episodes. I did have a question come up at the presentation in Minnesota, and just if there's any of you out there still wondering about that. Let's use an example of Egypt. UN says they're the number one importer of grain. So one Egyptian dollar is 13 cents US. And contrast that with one of our biggest competitors for grain, not just wheat, not just spring wheat and durum, but also number 3 exporter of corn, Ukraine was a couple years back. So one Egyptian dollar in Ukrainian currency is 2.95. So 2.95, 13 cents. That's kind of a no-brainer who Egypt's going to switch and buy there. Yeah, so I mean, that kind of, as Dave Ripplinger said back in September in a presentation, the U.S. farmer sits here and says, gosh, my wheat, it's so low. And somebody on the other side of the world, the grain merchandiser, sits there and looks at the board and says, that U.S. wheat, it's got to come down. Yeah. So that's kind of the grain updates. Cattle market, big story there. Cattle on feed report came out last Friday, and we've seen we're in the kind of a third day of a rally. Friday, Monday, and again today we are trending upward both in the feeder and the live cattle. We're at the November report for cattle on feed was at some of the lowest points that it was since '96. I think part of that is the feeders just, you can only squeeze them so much before they can't sell anymore, so they're starting to see some trade. I haven't seen that relay into the cash market. Cash cattle are still trending down. For last week, it ended 116 is what the cash cattle trade at. Box beef value is below 3-year average at like 196 a pound. But that is still good news, I think, with the rally on the board that shows that feeders and livestock, that there's going to be kind of a rally that way for prices for them. So then they'll be wanting to turn inventory and maybe be purchasing again and be purchasing at higher prices. So I think that could translate into good news on the cash market.
Good. I guess with prices the way they are for crops, you need to get the most out of those inputs as you can. With low snow covering areas this year, some people might be thinking about applying ammonia or urea to frozen soil. And Dave Franzen recently sent out an email about the story he wrote 8 years ago, a winter urea story. And it basically sums up that frozen soil does not allow nitrogen to move into the soil, so the N is free to move with snow melt and potentially wet soil conditions. And it's just not a good idea to be applying urea.
But by time savings.
I know, yeah, but you're just not getting any yield, so you're basically just wasting money at that point.
That doesn't sound good.
Yeah, so there is some statistics on that. go to NDSU Extension Publications, you'll be able to find something there. So what are we asking Santa to bring us in 2016? In crop yield, there are factors that we can control and factors that we can't. Like I said recently, your inputs like fertilizer, you can control that along with crop variety, the plant population, weed control. Those are things you can control. But you can't control weather. Weather outside is weather. So I'm asking Santa for moisture when we need it this year, or in 2016. And also cooperative weather so we can plant and harvest on time, and for more great yields like we had in 2015.
Yeah, I would say timely rain is almost more important than the quantity of rain you get in a year.
Definitely.
Yeah, for what I want from Santa this year, it's kind of, maybe you've seen the meme on Facebook. It's the rancher on Santa's lap, and Santa's saying, "No, I can't bring the 2014 cattle prices back."
Yeah.
I'm not a greedy man. I guess I'll settle for lower prices if we could see some stability in this cattle market. Yeah, we're trending up, but that was after a series of limit down, and now we're limit up again, and that's some big price swings in the market. And I think it'd be good to see some stability so we can kind of calm down and plan a little bit.
Definitely. Well, I think that's all we have for you today, and have a good one.
Thanks for stopping by.